Hello guys, this is Anshuman Rao and welcome back to another video. And in this video, we will be basically talking about how not to trade the financial markets. Basically, the last video which I made was completely on how I was, how I trade basically. And by seeing that video, you can copy those things, copy my blueprint, copy my footprint, and copy my steps basically, and use them in your trading strategy. And basically, you can use them to trade in your way. And basically, the whole video was how to trade in simple terms. I'm talking about the last video. But in this video, in today's video, we gonna specially talk about how not to trade the financial markets basically, because today, as you can see, the date is Tuesday, February 3rd, and the time is around 1:32 a.m. But I have taken these trades around in gold basically, um, during the London session in Monday. So now it's Tuesday because the time is 1:30 a.m. But according to Indian Standard Time, London session starts at 12:30 p.m. and these are the trades I took in Monday. So what happened exactly? Now I'm gonna show it to you. And this is the complete trade recording of Monday's gold trade, a trade in gold. And you can see that I executed an order, a sell side trade. And what happened was, what's the reason behind this trade actually? So the overall trend in gold was bearish, and as you can see, as you can see, I'm zooming in, and you can see the current candle which is opened is kind of forming a bearish engulfing structure, due to which I got a confirmation to execute a sell side trade, and I went for it. And the overall trend in gold was also bearish. So basically, this 2 points I checked in, and based on these 2 points, I took this trade. And it was no rocket science, and basically, it was a complete trend friendly trade. And yeah, all I did was anticipated for the price to move down. But what happened is, one of my key mistakes in this trade was over position sizing. So, what happened in next? Basically, the market moved against my anticipation and hit my stop loss. But if we just wait and watch, let me skip this for you. If we just, yeah, this is the time where I hit my stop loss, I guess. No, here I booked my loss. As you can see, here I booked my loss of $738. So basically, in a $25,000 account, 738 losing $738 is way much in single trade. So this was my one of my mistakes in um on Monday during the London session when I was trading gold. What I did was over position sizing. So the very first mistake which I performed was over position sizing. And if we jump in details, then in a $25,000 account, I lost around $738 in a single trade, which is, you know, it's if you compare it, it's more than 2%. 2%, uh, it's more than 2%. But what's the 2% of, 2% of $25,000 is $500. So basically, if you are risking 1% per trade, then in a single trade, if you lose, 1% is the maximum criteria. So 1% of $25,000 is $250. So in a single trade, the max I can lose according to the 1% rule is $250. But instead, how much did I lose in a single trade? That's $738, which is way more than the expected loss in a single trade. So it was my mistake over position sizing. The very first mistake is over position sizing, and the second most mistake, the second most, what do you say, the second most biggest mistake that I have to stress upon is I would say, not closing my losses early. So that was also one of my mistakes. So first point is over position sizing. And second was not closing my losing position early and let my losers run. So this was also my biggest mistake in the gold while on Monday. And the third most important mistake was, before jumping into the third most important mistake, I would like to show you the video. I would like to jump into the video and further continue in the by showing you the video. And after seeing this video, you will be getting to know what is my third mistake. So let's jump into the video and continue seeing this. So what happened after I closed the sell side trade? I waited for the market to break the last candle's high, and as you can see, as soon as it broke the last candle's high, I placed a buy side trade. So basically it was a counter trend trade, it was an impulsive trade, and it was my mistake that it's just like fighting the markets, which basically traders shouldn't do, and it's very unhealthy for the account. And this is the most devastating mistake I have ever performed. So basically here what I did was you know I just fought the market. I didn't go with my plan. I didn't go with the strategy that I have building for years and years. I broke my strategy. I didn't go with my entry plan. I didn't go with my exit plan. I just placed an impulse trade. But if you see in MetaTrader, if you see the gold chart, and if we see the gold chart here, so the basically, as you can see, somewhere around here, let me mark this for you. So here, this, as you can see, This was the London session move, and it was a counter trend move. The market was completely bearish, and this was a London session move on Monday, which was a counter trend move. Although the market went little bit upwards, but still then, okay, my counter trend trade would have been played out very well, but still then it's a counter trend trade, and there are high probabilities that counter trend trade doesn't work if you are trading using simple price action. But if you trade using order flow, if you trade futures, and if you use the legit order flow data to trade those futures, then if you are placing an a counter trend trade, then there are probabilities that it might work. But if you are trading using simple price action concepts, then there are high probabilities that the counter trend trade might not work. So in the end, without seeing anything, I just placed a counter trend trade. But the only thing I saw was the whether the opened candle, the open price, you know just breaks the high of the previous bullish candle. And if it breaks the high of the previous bullish candle, I will be entering into the trade, which is complete nonsense. But at that time, at the very moment when the markets were, when I was trading, at that time it made sense. But now it doesn't make sense because it's already over. you know Losing, the regret is very very high after losing something. So let's jump into the video without wasting any time. So we let the trade run, and it's pretty much revolving around our entry point. And here also I basically, um, little bit, I over position sized, but still then 0.3 lots is also too much. Let the trade run, we just waited. And you can see the floating PNL also. Let me zoom out for you. The floating PNL is very very high, and due to over position sizing, the floating PNL also got bigger. And as you can see, the floating PNL is around $500, went to $500, which is very unhealthy for account. And if you are over position sizing, then you have to deal with the drawdowns, where you have to deal with the negative, big negative floating PNLs. That's why over position sizing is very unhealthy while trading. As you can see, in a $25,000 account, minus $530 of floating PNL is not acceptable. The max you can tolerate is, and here, as you can see, what happened is I didn't close any order. I didn't even place any stop orders. The orders closed by itself because I breached my account. And yeah, you only breach your account when you are indisciplined. So this was something I recorded, the whole trading session I recorded, to show you how not to trade basically. So this mistakes what people make. So the third most important mistake that I made was over position sizing, yes. Not closing my losses, yes. And the third most important mistake was I didn't stick to my strategy and broke my own rules. This was the most, the most devastating mistake that I made. The third most devastating mistake. So let me talk about the position sizing part. As you saw in my trading session video, which I made on Monday, mm, you might have noticed one thing that over position sizing leads to a very big, floating PNL. Doesn't matter if it's positive or negative. Okay, if you are over position sizing, if you are, trading with heavy lots, even though your account is small, it it's still, unhealthy. Okay, you will be getting a huge dopamine when you are in positive, but what if it goes in negative? In trading, it's always either this or that. It's not one sided. So basically you will be on, the for first 2 3 seconds you will be on the positive side, but on the other, just in the other second you will be on the negative side. So okay, you can manage the positive side. You are highly, happy due to the big floating PNL, the big floating positive PNL. But what if it, jumps your entry price and goes to the negative drawdown? Then the negative floating PNL is also too big because you have over position sized. So you have to manage those things also. So to manage those things, you just have to cut out your position and make it small, and you have to risk at max 2% in a single trade. So this is what, in the end, it matters. You have to trade within your account limits. That's why that's why prop firms make restrictions. So this was all about the video, and hope you liked it, hope you enjoyed it, and hope you have learned something from this video. And this video was all about how not to trade the financial markets. So yeah, all good for now, and keep trading, keep learning, and peace out.